Hello YouTube family, you're welcome back to another video. So in this video I'll be sharing with you guys my trading plan and a template of how you can actually create one for yourself. So without wasting much time, let's get right into the video. Alright guys, so this is my personal trading plan, and you can as well use this template to create your own trading plan. Alright, trading plan is anything that you can create or a set of rules that actually guide how you trade, your entry, your exit through, your risk management, your trade management. So a plan or a book, a write-up or rules that guides how you enter a trade and how you exit a trade is basically what your trading plan is. A lot of traders find problem creating a trading plan, and if you don't have a trading plan, profitability is going to be very hard for you as a trader because you don't have rules that guide how you navigate the market and all of that. So in this video we'll be going through this detailed trading plan of mine, and you can as well make use of the template to create your own. So the first I have on the list is the pre-check list. So this is what I look out for. This is what I look out for while entering a trade. The first is my entry rule, what I check out for in the market. We have directional bias / market structure. We have premium and discount pricing. We have price at support and resistance key levels, entry on candlestick confirmation. Then I use POIs as well, making use of breaker block, overlapping imbalance, then order block plus inducement or engineering liquidity. Now I'm going to explain this. If I want to enter a trade, the first thing I look out for is directional bias. Now this is where I start from the higher time frame, doing my top down analysis, trying to know where the market is heading to or where the market is coming from, just to know the overall structure. Then after that, I look out for premium and discount prices. Premium is when you want to sell. I sell from premium areas and I buy from discount areas. So if price is not yet at discount and I want to buy, I have to wait for price to come to the discount level before I start looking for buying opportunities. And the third is price being at support and resistance key levels. Now these are areas, key levels in the market are areas that market has tested several times. So I wait for price to come to this zone. Once price is at my key level, then I start looking for confirmation to actually enter that particular trade. Then my entry can be based on candlestick for confirmation. For my buy trade, I use candlestick formation like the pin bar or the hammer, and I use the morning star as well. Those are the two major candlestick patterns that I make use of. I also make use of POIs. Alright, now if I'm not making use of these ones, I look out for breaker block. In terms of the entry, so I look out for breaker block. Price coming at this support and resistance key level could be breaker blocks, right? And they could be order blocks as well. So let me just show you guys what I mean in the chart. Now this is ETH/USDT. This is crypto. Now this can work in any market, crypto, forex, and all of that. Now if you check these places that I marked, now if you look from the daily time frame, you're going to see that these places that I marked with pulses at key levels. We started from here. This is a support level. You can see price tapped into it and started moving up. Yeah, same thing here. This is a key level. These are key levels. This is a key level resistance, and if price breaks above here, we might likely take out this high. Now look at where price is at. That is where price is at currently, and this is like a key level. You can see market has reacted off of this particular zone. Bought from here, it as well sold from here. Check previous price action. You're going to see how price actually reacted off of this level. Now if we come to like the 1 hour time frame to check what is happening in this market, you can see that we have a structure from here to here. This is actually low because this was where market broke structure, right? So and since then you can see how we correctly pulled back into discount level. Below this particular green line, is the discount level, and above is the premium level, and we're looking for buy. So I have to wait for price to come to this discount level. Then after coming to this discount level, I'll start looking for candlestick formation. Right now look at the first one here. This is a morning star, had a bearish candle, then a doji candle, then this is like a confirmation to actually buy this trade after this candle has formed. Another thing is, if I want to make use of POIs, I can as well make use of this as inducement, and this particular place my order block. So it all depends on whichever one you want to make use of. So I trade liquidity, so I would like to make use of this one because I want price to take out liquidity first. But if I'm making use of candlestick formation, I would be in this trade already, because at this point where this candle formed, I should be entering here and my stop loss below this low. All right, so let's go back to the trading plan. So that's that for the pre-check list. These are what I look out for. We have order block plus inducement and engineering liquidity. Now for the stop loss rule, my stop loss rule, last pullback low before the trend line breakout. Now this is an example of trend line breakout. You can see we've had these three higher lows. These higher lows, 1, 2, 3, and market is trying to break out from here. So if I should enter this trade from here, this is the pullback before the breakout. Now market breaks this trend line, so my stop will be at the low. So that's the rule guiding my stop loss. Then at the low of the morning star, so if I used morning star or evening star for sell and buy confirmation, I'll be putting my candle, my stop loss at the low of that candle. And the next is always give space to your stop loss for spread. Yeah, I normally do that. Instead of making it too tight, if I'm supposed to put my stop loss here, so instead of making it too tight, I can put it at the next low just to give room for the stop loss in case of spread. Now the second is risk management. Now in risk management, I have what I call the risk limit. Now I majorly use this for my Profem, so I trade Profem majorly. Now for my challenge account, these are the risks I take on them. So and this depends on the daily drawdown. So if the Profem that I'm trading with daily drawdown is 10%, I usually go for 1% risk. That's if I want to have like a 10 sample size. Now what I mean is like a 10 trial. If I want to if I want to have 10 trials on a particular account, I have to go with 1%. So because that will give me room for me to be able to trade comfortably. That means before I can actually lose the account, I have to lose 10 trades in a row but I can actually lose the account. But if I want to go aggressive, I want to get the challenge phases done as fast, I usually go for 2% consistent risk. And if I start with 1%, I continue the 1%. Like I'm consistent with the risk till I either pass the challenge or maybe blow the account. Then if I'm trading with, let's say I start the account with 2% risk, I will consistent with that risk till the end of the challenge phases till I make my payout. So I always maintain my risk. Staying your risk 1%, stick to it, you pass 2%, stick to it, you pass. Same thing. Then on my funded accounts, I usually reduce the risk to like 1% because it's something that I want to hold for a long time, because it's something that that will keep bringing you money depending on the time frame of payouts based on the Profem. Now, if your first trade on a funded account is a win, you wait to pay out. So this is like a psychology hack I use on my Profem. Let's say after getting funded, my very first trade on that account, if it happens to be a win, I don't trade again, right? I'll just leave the amount that I've made till the payout date. All right. Now this is a psychology hack that I normally use. Once your funded account is in profit, delete it off your MT5. That way you're not tempted to trade it again. So this is what I do. So instead of leaving the account there and saying it, because you might see a trade and you'll be like, okay, this trade looks good. Since I've made like 5%, can actually increase this number to like 8% and get bigger number, or more money, so something like that. So instead of being tempted to trade on that account, which you might trade again and lose the one that you've made already, so it's better you delete it off your MT5. See, you receive your payout, the one that you've made already, then you log in the account back and start trading it again. Back in those days, Profem used to give like 30 days to actually pass an evaluation. So I didn't want to like limit myself, since the recent ones it has unlimited time, like the time frame is unlimited. That means you can even take a year just trading the challenges, and that's not what you want to be doing. If you're somebody that just wants to grow and you want to get that funding, you can't just start risking 0.2%, 0.5% on challenges. All right, taking the whole year to like just pass why you can easily like pass, increasing your risk. This comes down to you as a trader, if you know what you are doing and the strategy that you make use of in the market, if it's something that is sustainable with high risk applied. The minimum time frame that I usually set for myself is 3 weeks to like get done with the challenge phases. 2 weeks maximum for the phase 1 because it requires a higher percentage to actually get it passed, and 1 week for the phase 2. My typical trade generates an average of 3 RR, so which means one winning trade can actually get my phase 2 pass, which requires only 5%. If I'm risking 2%, that means for a 3 RR I'll be making 5 to 6%. Why I said 5 is because sometimes I do take partial, so it can actually reduce the risk to reward. For the phase 1, which is 8%, I might not get that with one trade, but with re-entries, or maybe I get a win then a win again, I can do that in 2 weeks. So if I'm trading more than one account, I usually put a trade limit, because that will make me to stop over trading on the account. So I don't trade all my accounts once, and I don't do copy trading, so that if I'm on a losing streak, I'm not going to lose the account. Because if you're on a losing streak and you're trading 5 accounts, if you lose 2% on one trade, you've lost like 10%, because you're going to lose 2% on each of the 5 accounts. So I don't trade all my accounts. This is actually very good when you're in profit or when you make money, because you make more. But what if the trade, you're on a losing streak and you're having losing trades? So what happens to the account? You blow them once, and because of blowing one account, you blow out 5 other accounts because you connected them together and you're taking decent trades on them. So some Profem does not even allow this, but this is how I do it. 2 losing trades per week on one account. Let's say if I lose 2 trades every week, I'll just choose one account and start trading on the account. Then if I lose a trade on that account, I'll stop trading on the account and focus on another account. But my maximum trade per week is actually 3, so which means sometimes if I take the 2 losing trades, I might not trade for that week again on the account. Then if the next week comes, I'll start trading on a fresh account. Right? So we have same thing as 2 profitable trades. So 2 profitable trades per week. If I should have 2 profitable trades in a week, that means I will be passing an account, except if I'm in a drawdown. But that should actually bring it up to a sustainable percentage. So these are my probability status and how I trade. Let's say I started the week with a win, so I will take another one, and if it loses, I'll have to take another one again. That one can be win. So these are just probability the stars that I did. But if I take my first trade for the week and it's a loss, and I take the second one is a win, I'll have to take another one again to complete these 3 trades. But if I take my first trade for the week and it's a loss, then I take the second one and it is a loss as well, I won't be trading that account again for that week. If I take my first trade and it's a win and take the second one and it's a win, I won't be trading again, just to preserve what I've made already. And this should probably be making me money or passing an account or bringing an account out of drawdown. Either one of these would actually happen during this particular. So this is how I do it. Then the third one is trade management. This is actually how I manage my trade when I'm in the position. Talk about my emotion and how I try to manage psychology. The first thing I do is make use of alert. I make use of alert very well. So once I enter a trade, I will just set my alert. I usually set alert close to my stop loss, and I set alert close to my entry if I'm using buy limit, and I set alert close to my TP and at key level, so that if market gets to that key level, is either alerting me to like sell break even, to remove risk from that particular trade, or to book partials. It just depends. All right. So but I do make use of alert very well. So all these ones are talking about alert. Then the third is scaling in positions using re-entries to maximize profit. Like I said, achieving 8% in phase 1 is something you cannot do with one trade. For my type of trader that usually get an average of 3 ROR, if you're risking 1%, that will be 3%. You're risking 2%, that will be 6%. You will not still hit the 8%. So I usually make use of the entries to actually maximize it, which actually helps me sometimes to like pass profit challenges from just one trade. How do I do that? From re-entry. So let's say I'm in one position, I get a trade, then I'm already in the trade and it's running in profit. Then that trade might provide a re-entry opportunity. That's another trade. What I usually do is to risk another 2% on the setup. So they might have the same stop loss, they might not have the same stop loss. But before I do this, I will make sure that my initial position, first one that is running already, is already at break even. So this way, even if the trade goes against me or later reverses, I'm only going to lose 2%. And the first one that I've already set at break even will now be, if price eventually comes back to the entry, it will be taken out of break even. So I will end up losing 2% at the end of the day. And that way, I was just like using less risk to actually maximize profit. Instead of losing 4%, I will just lose 2%. If the trade had gone to my target, I'll be making let's say 6% from the initial position, and as well a potential 6% from the re-entry, and that's like 2%, 12% overall, and that should actually get the phase 1 pass. Only set break even when price is at skill level and has the potential of vaccine. So this is actually there. Then only take partials when price has moved 50%. Taking partials actually comes when price has like moved like 2 ROR, because my usual target is usually like 3 times, like 3 ROR. So if price has moved like 1.5 to 2 ROR, I usually book partials. So it all depends on the trade. I maintain risk to reward, and we'll have only trade when there is volume. Now, this is like having defined trading hours and not just trading anyhow. All right. Before I used to jump from, I would just see setup and enter without knowing the particular, trading hour that has the highest volume. Now, after my years and months of study, I've discovered that Asians and New York or gold are actually trading hours where the volume is actually high, where you're likely to get a big move in the market. Asians, I am usually active during 1 a.m. This is when Asians opens and volume is usually high. During New York, which is 1 p.m. as well. So we have defined management decision. This is the fourth one. So we are going to read out this now. Once a trade is triggered, you have no control on it until break even is set. This means there's no adjusting of stop loss or TP, no matter how hopeful you are. Remember, hope is not a strategy. Now, this is very, very important, because I've made this mistake a lot of times where I'm in a trade and at some point I started hoping, okay, price might actually come back up and stuff like that. So, and it will be very hard for me to accept that loss. So all I do is to adjust my stop loss. Let's say where the stop loss was before, I'll just increase it a bit, because I feel like market is going to snipe that one, like take that stop loss that I had initially and start reverse. So because of that hope that price might likely reverse, and it has something to do with ego, not really accepting that you might be wrong, that strategy or that particular setup must go the way you planned. And at the end of the day, instead of losing what you're supposed to lose, which is your usual 1% or 2%, you end up losing more because you were hoping and not actually trading what you're seeing in the market. So this is very important. All your analysis or bias should be made on the trade before execution. Once executed, no further analysis till you set break even or trade risk free. Now I'm saying all this based on personal experience, because I've had cases where I'm in a trade, after making my analysis, now the trade has triggered and is running. All right, so while this trade is running, look at what I do. I'll start making analysis again on a trade that is running. Maybe if I had a buy bias before that made me actually enter the trade. Now let's say the trade is going against me. I'll start having, okay, this trade might actually sell. I'll start spotting areas where the trade will sell from. So in that kind of scenario, spotting where the trade will sell from, and I'll start making decisions like closing the one that is already running, maybe in a loss or something, you get, and maybe entering the sell position, because I feel like I didn't do the analysis I did earlier wasn't the right analysis, and at this point I should actually change bias, and I'll just close it in a loss. And most 80% of the time you find out that the one that you closed in a loss will not be the winning trade at that point. Then the one that you went to set later, you will not lose. But you lost in the first one because you closed it when it was at loss, and the one you entered, the new position, you as well lost. So that way you lost both ways, and the trade, the initial one that you could have just left so that the market would do its thing, you lost that one as well. So these are things that actually guide me. Then the fifth one is distraction rule. This actually sounds funny, but it's very true. All right, most times when I enter a trade, I'll just sit on the chart watching every move, watching every tick of the candle, and that actually plays with your emotion. When you enter a trade, you can go do some other thing once you set your alert. All right, so once your trading is running, instead of sitting and watching how every candlestick form, you can go do something else. Only check when you get an alert like that. Those alerts that you set when you were setting the order, or when you were already done setting the order, you can go back to your chart when those alerts get triggered. It means that you should watch closely, right? That is the only time you should be looking at your chart, and not all the time. You can go do something. Somebody like me can go to the gym, right? You can go to the gym, go work out. You won't even remember you're in a trade. If you're making video, you can content creator, you can actually start making your videos. That way you might even forget you're in a trade, so you get those alerts or any of the alerts. All right, then if you're the game type, you can just go play game and do all of that. So just to take your mind off it, because if you're actively present in the market, I'm sure that you're going to make some decisions that you're not going to like, that you might likely regret just because you're active on the chart and you're just watching those candlesticks. The bias thing I told you, changing from you had a buy bias, then later you now switch to sell, is as a result of you being active on the chart, because you can't just let go of this chart. You can't just keep your eyes off it. So that way you start finding things that are not there. That's over analyzing. Analysis paralysis will just set in, and you make mistakes that will cost you money. So the last one is the most important one, which is accountability. Now there's one big trader that actually does this accountability stuff well. I'm not going to mention his name, but it's someone I look up to. There's no need. Is this guy Aleph G? Is a very big forex trader. He talks about accountability, all those kind of stuff. When you don't follow your rule, you do something crazy. There was one challenge that he was doing. I was following the challenge up to some points when there was a time they didn't follow their rules, so they have to, instead of him, taking his Lamborghini on a drive, he instead took one that does not have AC. Like, it's kind of funny, but I think the point there, the context of him doing that was just to suffer himself because they broke their rule. Right? They were supposed to follow a certain rule in their trading plan, but they ended up, because we are humans, no matter how you set these rules, you're going to break them. So you need something to be accountable. So when you remember that if you break your rule, you're going to do this thing, or you're going to go back to this thing, so you'll be like, I don't want to break it, something like that. So holding yourself accountable is going to help you to be disciplined enough to actually follow this rule. That is what accountability is all about. You need to hold yourself accountable when you break any of these rules, and this is how you follow them. Stay disciplined. This is how you follow them and stay disciplined. Look for something that is very difficult to do. I wrote examples. It could be giving $10 to a random person anytime you break. So it's literally something is just removing money from your pocket. You don't want that to be happening all the time. And it could be doing leg day. Leg day is something that is very difficult. Everybody knows that. A gym body, you know how leg day is always right at the gym. So everybody runs from leg day. So if you're the gym type, you just work on your leg. You broke your rule that day. Even if it's not leg day, you give yourself that pain, right? It's the pain of breaking your rule. So next time, remember the pains. You're still feeling those leg cramps from the leg day you had the previous day. Go try them. You won't even try breaking your rule. That way you'll be able to stay disciplined. It might not be 100%, but 80% at least. If you can do it 8 out of 10 times, that should be good, and that should actually take you to profitability, closer to profitability. So if you want to get to that point, so trading plan is very important, and these rules are very, very important. In as much as you're writing them, the most important thing is following these rules. All right, so I've given you guys a template. You can as well use this template to create your own. It doesn't have to be exactly what I have here on my screen. You can just use the outlines, then write what suits your style of trading. So thank you guys for tuning in, and I will see you guys in the next video.